All right, I'm excited to be with you guys. I think it seems like we're running quite a bit behind, so I'll try to go quick today. I know you guys have seen a lot. Hopefully, the things that I talk about are something that can be new and beneficial to you. I will read all of the questions, all the comments. So if you guys have a question or a comment, go ahead and feel free to type those in. John says, and you only have to be right about 50% of the time if you use good stop loss to prevent losing too much on a single trade. He says, yeah, no kidding. John, that's exactly what I want to talk about today, actually, is how do you know if one trading system or another is going to be successful? One thing that I've learned through the years, so my background, let me just give you a little introduction of myself. This is me. I got my pilot's license when I was 17 and I've been flying my entire life. Basically, I started flying when I was about 13 years old on a scouting adventure. I got my Eagle Scout and ended up getting interested in flying at a very young age and basically just hung out at the airport most of my life. I got the same sensations when I started trading. I got the same sensations from trading that I got from flying. This is a picture of me doing some stupid stuff as a teenager, flying a little riverbed. But in any case, again, I think that most of you are familiar with the highs and lows that can come from trading. And what we want to do is we want to attempt to eliminate those emotions so that we can, really focus on the things that lead to long-term success. And emotional trading doesn't do that. So anyways, I got into trading. I started a hedge fund, about 5 years ago. It's called Ren Capital. I operate a site called thesupertrader.com. We do a lot of what everybody else does. We give some trade ideas. We have some training, and there it goes. So in any case, yep, somebody did help me fly. Who do you credit with helping you learn to trade profitably? That's a great question. So I would say there's multiple places, John. I interned at Goldman, and I was an intern on their options desk, and I learned a lot there about how professionals really trade. They don't trade the way that most of the retailers teach to trade. I've gone through lots of educations, gone through lots of them. I've probably spent over 30 grand on education, and most of that, didn't really get me much of anywhere. I would say I learned the most from my Goldman time, and I also have a couple of just one-on-one mentors that I've met in the hedge fund world that have really helped me out. So anyways, we'll get into some of the things that we do here, but one thing that I want to introduce you here, there's 3 things that will make you instantly a more profitable trader. I learned this from Goldman, and it's one of the things that, profit and loss was a byproduct of doing a couple of good things right. The first thing is that you need to have a plan. Lots of this stuff is going to sound elementary, but how many of you go into a trade with a written plan, actually written down? How many of you have a template where you take the time to actually write down what it is that you're doing? If you don't, you're going to find yourself getting in trouble because you're going to be driven by your emotions. One thing that we do, we have a full template. I'll show you the template right here. It's a PowerPoint template that we use, but at the very beginning of it, we have our ticker, the date that we place the trade. We have a basic chart which shows the technical analysis, just a basic overview of the analysis that we performed. So this is on Google. We saw a double top here. We felt like, with Google coming in initially, that it was going to fade on the initial touch of that double top, especially after it had gapped and gone just a little bit on positive earnings recently. And so we put on a vertical call credit spread. We didn't feel like it was going to drop drastically, but we didn't feel like there was a whole lot more upside. So we picked a fairly conservative, bearish to neutral type trade, and we outlined it here in what we call our trade template. So we put the ticker symbol, the expiration date, the strategy that we're using, our strike prices for those that don't trade options. That's fine. You can create your own template for stocks or whatever else you may do. We put in the credit that we received, the risk of our position, and the return on risk. But most important is our position management plan. Both how are we going to manage profits and what are we doing to manage our losses? And all of that is based on, we go in and we determine what our loss is going to be if our trade doesn't do what we think it will do prior to us ever getting into the position. I'll talk to you a little bit about why it's important to know exactly what your loss and your profit targets are going to be in a moment, because that's everything in terms of having a good system that will lead to long-term success. So first thing that will give you, oh, and then by the way, we also then have a page where we take a screenshot of our filled order, our open position, and our closed position. So first thing you need to do, you need to have a plan. If you don't have a trade template, I can share this one with you. Just let me know in the chat and I can share that with you. That's fine. The next thing that you need to have is you need to follow that plan. How many of us can say that, you know, when a trade doesn't work out, it was probably due to not following your plan? How many know what I'm talking about? How many understand, you know, I can't tell you how many times somebody will say, you know, I thought it was going to do this and I knew it was going to do that and I just didn't follow my plan, right? Yeah, sure thing, Karen. Jamie, I'll share the template. Agnes. John says maybe your plan is wrong. You do need to have contingency plans. You're right. You need to learn from your plans. What do you do when your plan is wrong, John? Hopefully you know, before you got in your airplane, you know, you really took the time to, you know, do your course plan, your flight plan. Hopefully you took time to do that, because, you know, when you're in the air, it's too late. Yeah, sometimes your trading plan is wrong, but a lot of times I've found that it's not necessarily wrong, it just didn't work this time. See, my Google position here, you know, it may not have worked in my favor, but that doesn't mean that it was the wrong thing to do. See, I have no idea what the future holds. All I know is what's been happening in the past, and what's been happening in the past is that Google had an all-time high back here, and standard protocol says is that a double top generally gets rejected. So I trade it based on what typically will happen, and if it doesn't happen, then my only job is to protect myself if things don't go my way. And that's where, again, we follow that position management plan, our PMP, our loss management plan. So I wouldn't say, John, that it's so much that my plan was wrong, because in trading, you know, you're going to have good trades, you're going to have bad trades. The only time I think you can be wrong is that if you don't follow your initial plan from the beginning. If you're just flying from the hip, then you're going to find yourself making terribly emotional decisions. Paul says, better bring a parachute. Yeah, absolutely, Paul. Better bring a parachute. So step number 2 is follow your plan. If you don't have these 2 things here, then you need to take a step back and you need to stop trading until you have plans and stick to those plans. If you're not capable of sticking to a plan, you're probably not cut out for trading. See, at Goldman, that was one of the only things that we'd be fired for, is not following the system. You know, think about it. If you're a banker, you have an absolute system for issuing a loan. Let's say you are over the mortgage department. Okay? You don't issue a mortgage based on what you're willing to lose. You issue a mortgage based on risk metrics that the bank's mathematical department has given you. Okay? There's no emotions involved. You follow that set plan from the very beginning. You don't issue loans just from the seat of your pants. You follow the metrics, the mathematical metrics have been given from the higher ups. So you've got a plan as a banker, okay? As a banker, you've got to follow your plan. That includes, when do you foreclose, right? There's no, oh, I'm losing too much, it's getting too painful. There's zero emotions involved. Does your trading look like that, or is it emotional? Okay. So number 2, follow your plan. Number 3 is something that I think we miss a lot, and it's something that I think we would be better off to be searching for this third one than looking for trade ideas and training. Training comes from, I learned more from the school of hard knocks and getting into the market than anything. And same thing with flying. I learned more from getting behind the cockpit and flying, than anything. But number 3 is have a co-pilot. Find somebody that knows what you're doing, that knows what you're striving to do, and can hold you accountable to it. So I went on a church mission for 2 years to the Philippines, and before I left, I was supposed to go up with my instructor, and we are going to go out for one last flight. I used to work at the airport, and at the time I was working the night shift and finishing high school actually. And in any case, I was just getting ready to graduate before I was going on my mission trip for a couple of years, and I came into the airport at 5 in the morning one morning to go flying, and the previous day my instructor had asked me if I wanted to go flying one last time before I left. I was going to be leaving the next week, and I wasn't going to have any time to go up, and I said, I want to go see my girlfriend before I don't see her for 2 years. And so I went and saw her instead, and I came in the next day, and his car was still there in the parking lot. And what had ended up happening, his name is Brent Brody, but what ended up happening was he went up, and he went up all by himself, and he ended up doing barrel rolls in a Seneca, just a single fixed-winged airplane, and started doing barrel rolls, and the wings got torn off of the airplane, and he died immediately on impact. And I don't think that it ever hit me harder at that point in time than the importance of having somebody that keeps you accountable. In trading, it's really easy for us to deviate from our plans. It's a very, especially as retail traders, we're alone. And most of us we're in our offices, we're in our basements, and it's easy to make bad decisions. And so find somebody that knows what you're doing, knows how you're trading, and is as good or better than you and can keep you accountable. John says God was his co-pilot. Yep, he's resting with him now, that's for sure, but he paid an awful price by not having somebody there that could keep him accountable. And so that's important in trading, and that's important in really the most important things in life, is to have some accountability partner. And especially in trading, there was no professional floor that I've been on where we were alone. Yet you and I oftentimes find ourselves alone. Joel, not this one. John says, know your own limits. Yep, know your own limits and have somebody to help you be accountable, because sometimes we deviate from what we know is right. So always have a co-pilot. So let's talk a little bit about, let's delve into what makes a good plan. I promise you this is going to be more in depth than have a plan, follow your plan, and have a co-pilot. So let's talk about what makes a successful trading plan. What are some guesses, you guys? What do your trading plans look like? What do some of your trading plans look like? What are in some of your trading plans? So I do some basically just some small business investing. I'll invest in small businesses, and we had a small business come to our group. It's called Life Elevated Rentals, and they pitched us this business plan. And this business plan is 29 pages long. It goes through executive summaries, business description, marketing plan, operations plan, financial plan, right? Articles of incorporation, operating agreement, plans for their building, contracts, things like that. So is this what your trading plan should look like? John says buy and hold and buy more if it goes down. Jamie says ensure low risk to reward. Agnette says goals, methods, setups, evaluation. Ooh, I like that. John says eventually the price will go up again. John. Oh. James says entry, exit, stops, targets. Scott says the rules you will follow. Joel says manage risk. James says position size. Ooh, I'm loving all this stuff, guys. I'm loving all this stuff, and a lot of it is what I would say. I would narrow it down to 3 things. If you don't have a pad of paper out, get one out now. 3 core elements to a successful plan. This is what we follow at Goldman on the trade floor. This is what most hedge fund quality systems will follow. So write this down. John says anticipate, confirm, and execute. I like it. ACE. Number 1, your win rate. You need to define what your target win rate is going to be. Most of us have a complex where we want to be right often. How many of you have heard of the turtles? How many of you know what their win rate was? Agnette says 20%. Scott says 42%. Harry says 51%. We're getting a lot of different answers here. The consensus is did they have a high win rate? Were they right 90% of the time? Ike says 100%. All right, Ike. Enough of that, brother. Were they right often? Did they have a high win rate? No, they did not. No, they did not. How many of you target a high win rate? You want to be right most of the time. That's generally a retail trader's mindset. We have a problem with not being right. It stems from being taught at an early age that losing money is a bad thing, right? The bottom line is I don't care what your win rate is, you just need to define it. Because until you define it, we can't begin to speculate what rewards we should target and what risks are acceptable. So the number 1 thing you need to do is define your win rates. I was just looking at the panel of investors that are speaking in today's workshop. And I actually tuned in when Dean Jenkins was speaking. I thought he did a pretty good job. It's difficult speaking to your computer when nobody's responding back. You feel like you're speaking to thin air. You have to look at these questions being typed in a chat box. So sometimes you feel like you're talking to nobody. But I ended up going to Dean Jenkins' website, and I pulled up his actual closed trades 2016 year to date. Okay, so we scroll down here and we see that Dean Jenkins gives some pretty helpful information. Number of trades, wins, losses, total profit, total loss, win ratio, payout ratio, net profit, year-to-date return on account. So in regards to win rate, Dean is right 56% of the time. How many of you would say that's good or bad? James, one of their systems was as low as 20%. Scott says, I am an engineer by education, hard to claim career success at 50% win rate. So Karen says good. George says good. Agnet says not relevant as a number. Jeannie, how are you doing, Jeannie? It's good to see you in here. Indifferent as long as winners bigger than losers. Jamie says bad, must have a high win rate. I'm here to agree with Agnet is that it's indifferent, and same thing with Jeannie, indifferent. We don't know if that's good or bad. We have no idea if that's good or bad. Okay? Now psychologically you may not like to, only have a 56% win rate, but the turtles were some of the most profitable traders, yet they were only right 20% of the time. Let me introduce you to a little software that we've developed. Okay? So let's come in here and play with a couple of things. This is what we call our trade and risk analytics tool. If you stick around, I'm going to give this to you at the end of this. Renee, will you let me know just the time that I've got? I think I've got about 20 minutes here.
Yeah, it's about 20.
Okay, good. Thank you. Will you please ping me if I'm going over?
Yep, I will.
All right. So this is what we refer to as our trade and risk analytics tool. What this does for us, one thing that was frustrating for me in the retail industry that we had in the professional industry, we have what's called the Bloomberg terminal. The Bloomberg terminal was invented by Michael Bloomberg. It cost a little over 50 grand a month. Talk about a monthly subscription, huh, John? How many of those monthly subscribers do you need to make money on that? But it costs about $50,000 a month, and there's a reason why over 100,000 banks, hedge funds, and other professional traders subscribe to it month after month and have done so since the 70s. It's because it allows them to create systems that lead to long-term profitable trading methodologies. All they have to do is stick to them. It doesn't matter if you have a drawdown. It doesn't matter if you have a loss. If you know what your future looks like, if you stick to it. Okay? So is our friend Dean Jenkins, is his 56% win rate good or bad? Just like what Jeannie and Agnet said, and John Carter and Harry, just like they said, it doesn't really, we don't know. We have no idea if that's good or bad or not. Okay? So let's plug this in. Up here at the very top, we have our inputs. Our win rate is the one that we're talking about right now. Okay? So we have to define in our trading plan what our win rate is going to be. That's the first metric that you've got to define. The second metric that you have to define is what is your reward risk ratio going to be. That's the percentage of profitable trades the system should target for every, the risk reward calculation gives us a ratio of the average profit to that average loss. Okay? The way that you calculate it is you take your average profit divided by your average loss. So let's go back to our friend Dean Jenkins. Okay? You can see ours as well. It's all on the website at thesupertrader.com. But and we can do that here in a minute. But Dean Jenkins, total profit $26,923. Okay, so let's take $26,923 divided by, he's had 15 winners. 15 winners. So we'll divide that number by 15. So the outcome here is we get an average reward of $1,794. An average reward of $1,700, we'll round it up, $1,795. $795, okay? That's his average reward. His loss, total losses this year, 11,562. 11,562. Divide that by total number of losers, 12. Divide that by 12. That means that his average loss is $963. Okay, we'll round that up, 964. Okay, so average reward is $17.95 divided into his average loss of $964. That's going to give us a simple number that we call our reward risk ratio. Basically what it says here is that he's making $1.86 for every $1 that he's losing 56% of the time. Is that good or bad? Anybody have any idea? Can anybody forecast for me whether or not Dean is going to be around in 10 years sticking with this? Agnes says it's okay. Harry says it's good. John says it's too much math for retail traders. That's exactly right. And for that reason, you and I will continue to struggle and continue to be sold trading program after trading program after trading program. We're being taught that what we're lacking is training. What we're lacking is knowing the metrics that lead to success, folks. Harry says his profits exceed his losses, but only 56% of the time, Harry. Fred says all day long. John says yes. Let's go take a look. Now the days are over where, John, you have to calculate it. We've programmed it into the software, and I'm going to give it to you today for free. You don't have to buy a dang thing, okay? It's the one presentation today where you're not going to be pitched anything to buy. So our risk to reward ratio, 1.86. Let's plug that in. So what it's doing over here is it's spitting out a simulated performance with these metrics that I've got plugged in. It's giving me 1, 2, 3, 4, 5, 6, 7 different simulated outcomes. The Bloomberg terminal spits out 10,000 different simulated outcomes. 10,000 different simulated outcomes. Okay? I couldn't program that. It wouldn't run on any one of our computers, so I programmed it to spit out 7. If you press F9, it will simply redo the algorithm. All you have to do is press F9, and it will redo it over and over and over and over again, and you can see as many simulated performances as you want. What is the white line significant to? Nothing. It's just picking one of these random simulated performances to highlight in this performance output over here to your left. Okay, that's all it's doing. It's not the highest probability outcome over the next 200 trades for these metrics. It's just picking one of the random outcomes and spitting it out. Folks, now does it matter if you have a losing trade if you know that this is the path that you're on? You know you're going to have drawdowns. You know it. Don't let it ruin your weekend. This software allows you to start to begin to think like the smart money thinks. It allows you to be able to begin to think like the professionals think. All we care about is the metrics. I don't get emotional about one trade not working or not. Doesn't matter at all. Okay? Doesn't matter at all. Scott says, with this data, goal is to take the 200 trades. Well, the purpose of this data is to be able to stick to a system saying, man, my win rate dipped a little bit. I need to bring that up a little bit. Or, you know what, I'm noticing that my reward to risk ratio is dipping down a little bit. I need to bring that up a little bit. It allows us to finally visualize the things that lead to long-term success. Look, don't take another trading program or another training or another education until you have this software, because it's not going to do you any good until you start to actually visualize where you're really messing up. Look, I don't care if you have a low win rate. Some people are just really bad at reading charts. Okay? You can have a low win rate. That means that you need to have a higher reward to risk ratio. I can tell you if I had about a 55% win rate, I would be targeting closer to a 3-to-1 reward to risk ratio because of the chance that we have random anomalies. Okay? Yes, you will, Michael. I'll give you a link to download the software. So that's number 2. Number 2 is your trading plan has got to define what your reward to risk ratio is going to target. John says, "Now I'm happy I stayed to watch you speak. Telling us the truth makes you different than the rest." Thanks, John. It's because I am you guys. I started this because I got tired of hearing the same thing over and over again. So number 2, reward to risk ratio. Write this stuff down. Folks, if you're not writing this down, get off. Okay? Write it down. You need to define these things. What is your win rate going to target? What is your reward risk ratio going to be? And then you can begin to adjust it as you go forward. Okay? Write this stuff down. Number 3, position sizing. What are you risking per trade? As a banker, do we just risk what we're willing to lose? Do we just risk what we're willing to lose on that Ford F-150 car loan? Or that 5-bed, 2-bath? No, we have an absolute risk metric that guides how much we can invest in any given opportunity. Folks, not all trades are the same. This whole talking head, don't risk more than what you're willing to lose. Don't risk more than 2% per trade or 3% per trade. Boy, I tell you, if you were a bank, you'd be out of business if you thought that way. You have to have something more concrete. You and I don't have the technology to help us define those things. At the Super Trader, we've developed 3 different trading systems that have done all of that. But you need to define your position sizing. So let's go over here back to our good friend, Dean Jenkins. I've got 3% in here. Let's say he's risking 5% or 10% per trade. Okay, 10% per trade. Let's just press F9 here. And what we're looking for is we want to see all of these lines going in the same general direction. We want to see anomalies. Compound interest is insane, folks. Let's go down to like 1%. His system's not bad, folks. His system is not bad. It's not bad. I don't know if it calculates in commissions. That would be interesting to know. But look how tight-knit those are. And as I continue to press F9, I'm not seeing random anomalies that are kind of shooting off down here. Okay. Most retail traders are going to have a hard time with a system like this because they can't tolerate not winning more often. Okay, and that's okay. But the reality is you need to find a system that works for you. Is Dean's going to be successful? Based on the Monte Carlo simulator here, it suggests that, yeah, it's a pretty smooth Sharpe ratio. It's pretty smooth ascending trend. Okay? Scott says being LDS, you can't tell a lie. I think you can tell a lie, but, I don't think anybody's supposed to lie. Anyways, I don't mind it. Folks, those are the 3 things you need to define. So if you didn't get anything else out of this, day today or out of anything else I said, I hope that you'll start to internalize that, chart reading and understanding how to place trades, that's only going to get you so far. You have to start being directed by the math, and that's what we're directed by in the professional atmosphere. Okay? I know over here, I think we've got it on the front end, but if you go to thesupertrader.com, a lot of people leave out the. If you go to thesupertrader.com, I think on the front page there we've got the results the past couple of years, and it shows our win rate, so our overall percentage winners, our average profit, our average loss, and our year-to-date return so far. It's actually 40%. I've got to update that over the weekend. It's 41.22. But you can go in here and watch the past videos. We actually place all this stuff live right in front of you. I trade it live with my own account, live right in front of you. Here's my account, right here. I trade it live right in front of you. Okay? I donate everything to charity, any of the profits, but folks, you've got to start defining those metrics. If you don't have those metrics defined, so let's take a look at mine. 83% win rate. So let's go ahead and plug in 83% win rate. I tend to target a higher win rate because it's easier on the mind. Okay, most people like to win more often. I've got an average profit of $1.19. Somebody said, oh, he wins more than he loses with Dean. Look at me. I'm losing more than what my winners are. Okay? Is that good or bad? Well, again, we don't know unless you define your win rate. This is standard, folks. When you have a higher win rate, you're generally going to see a lower reward to risk ratio, meaning that your average profit is most of the time going to be less than your average loss. Your average loss is going to be typically greater than your average profit when you are targeting a higher win rate. So in this case, I have a 0.79 reward to risk ratio. So let's plug that in. 0.79 reward to risk ratio. Okay, nice and tight, folks, nice and tight. Okay, nice and tight ascending trend. That's what I want it to look like, really tight. Okay, really tight. I don't want to brag, but mine's going to do a little bit better than his. But nonetheless, his is good. And, you know, again, the bottom line here, my point is you just have to define it. You have to define it. John, the reason why is I generally do credit spreads. I have defined risk and defined reward, so that's why. I do, Jamie. We provide those things. I'm not going to get into that today. You guys have been pitched so many things. Jamie says, do you provide buy or sell recommendations? We do. I'm not going to get into it today. Folks, I'm out of time. You asked me, where can you go to download this analytics tool? It's right here. I will put that in the chat. Does everybody see that in the chat? www.thesupertrader.com/analytics-tool-registration. Everybody see that? Everybody see that? Just tell me yes in the chat box if you see it. Okay, cool. And if you want to find out a little bit more about what we do, I do a workshop. I think you'll get a send. It'll be in the email. You'll get, once you register for the analytics tool, you get an email with the tool, and then in the PS, if you read the PS, it'll tell you about a workshop that I'm doing next week. I do one on Tuesday and Wednesday called Picking Winning Trades. Stop losing money and start trading like the pros. Learn how to time your entries and exits with scientific-like accuracy. So anyways, folks, I hope you've gotten something out of this. Tell me what you learned. Give us one thing that you learned today. Give us one thing. One takeaway. And you need to write down one thing that you're going to do today to take massive action with the things that you've learned. I don't care if it was from my presentation or somebody else's. Tron says no, he doesn't see that link. Tron, it should be in the chat area. Okay, so John says stick with the plan. Dan says have a plan. Agnes says all good stuff, really appreciate it. Don't ever go flying alone. Vicky, great takeaway. John says, why did you leave Goldman? Because I think that retail investors are being taken and really suffering from the education industry, and I wanted to make a difference. Ike says patience. Paul says plan, plan, plan. William says I did this 1.3. The download does not work. The download does work. It will be automatically downloaded. So when you get the email, folks, I'll show you what it looks like. When you get the email, it's right here in mine. I've tested it. It'll say your trade analytics tool right there. So you get an email. If you don't see it, go check in your spam. This is what it'll look like. Hey, as promised, here's your copy of the trade analytics tool. Click to download the trade analytics tool. Once you click that, it's going to open up a screen, but it will just download it. It's an Excel spreadsheet, so it will just download to the bottom there. See? It's right there. So you just click on it and open it up. If you have any problems, send me an email. You know our site. You know how to get a contact with us. And then at the very bottom of that email, P.S. I'm teaching a workshop next week. Sign up for that if you want to find out more. Anyways, folks, I'm out of time. Renee, Investor Inspiration, you guys are fantastic. Love you guys and appreciate the opportunity to be a part of it. And hope you guys have a great rest of the day. And as always, until next time, trade super.